We're going to look at history as before Satoshi and after Satoshi. And the ability to bring Bitcoin to the 99% of the world that has not yet embraced it in the year 2024, like this is the Bitcoin gold rush. The next 10 years is the most exciting opportunity to improve the world that has ever existed. Because before Bitcoin, I was just ready to retire into obscurity, and I thought that I had written the final chapter in my life. And you know, make no mistake about it, right? The great person of our era will be remembered as Satoshi.
Before Satoshi, the digital currency was mainly theoretical, and decentralized systems had difficulty gaining traction. Bitcoin introduced blockchain technology, enabling peer-to-peer transactions without intermediaries. Fast forward to 2024, and Bitcoin has become a global phenomenon, with millions of users and a market capitalization in the trillions. But despite its remarkable growth, many believe that Bitcoin has yet to reach its full potential. As Michael Saylor puts it, the next 10 years represent the Bitcoin gold rush, a period of unprecedented opportunity to bring Bitcoin to the masses. However, as more and more people join the Bitcoin community, some investors worry about the possibility of the crypto asset being hoarded and manipulated. In a recent interview with Natalie Brunell, MicroStrategy CEO Michael Saylor explains why Bitcoin can't be manipulated or controlled by powerful entities. Saylor believes that as more people join the Bitcoin network, it becomes more decentralized, reducing its vulnerability to corruption or interference. We will now bring you clips as he explains this thought. As we show you these clips, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Make sure to watch the video until the end, as Michael Saylor shares the ultimate strategy for investing in Bitcoin. We hope you enjoy the video.
I think it's continuing to decentralize. I think that every single time you have a new participant in the network, they decentralize the network further. And I think that the more participants we have, the less likely it is that someone will corrupt the network. If a country in the Middle East decided that they wanted to buy a lot of Bitcoin, I don't think they're taking over Bitcoin, because 99% of the Bitcoin is in someone else's hands, and they triple the price of Bitcoin. And so the 99% of the people that hold the rest of Bitcoin just got 3 times as powerful. And so there's no way for someone to join the network and undermine the network. They're strengthening the network as they join it. What they would do is, if a big player in the Middle East joined the network and became embedded and had skin in the game, if the US government took an adverse position, you would have another sovereign that would take the opposite position. Mm-hmm. So if you're worried about one country or one company having an influence, then the best thing that could possibly happen is have 10 other companies in 10 other countries, because now you have a network of interdependencies and you have checks and balances throughout. And I think that we've got more and more checks and balances, and as people invest more in the network, they become more conservative, and they will resist, you know, enthusiastic proposals to fix Bitcoin. Mm-hmm. Right? It's like, it's very easy. I notice the most enthusiastic proposals to fix Bitcoin come from people that don't have any Bitcoin. Right? And if you actually bet your entire country on Bitcoin, then you wouldn't be so enthusiastic to tinker with the network. If you bet your entire company on Bitcoin, then you wouldn't want to tinker. So ironically, these bigger actors are actually more conservative. They like it because they can trust it, and they can trust it because no one's changing it. If you take certain other crypto networks where they change them every 6 months and they tinker with them, every time you do a hard fork, you could destroy the entire thing.
Right.
So who is in favor of hard forks? It's generally the protocol developers that you know, want a job. They want to do something to help. They're the only ones that can do the hard forks. So they're the ones that promote them. Who doesn't want to do the hard forks? It's everyone that's bet their life, their future. If you're actually planning, if you're buying a lot of Bitcoin to give to your great-great-granddaughter, you're not terribly enthusiastic about a roadmap with 6 hard forks, right? So I think that there's no way for any one actor to get control of the network. All you can do is empower the rest of the network by a factor of 100. And owning a lot of Bitcoin doesn't really give you power. I mean, the network,
Right.
the network is stabilized by a combination of computer power, electric power, political power, economic power, right, and transactional power. So, Coinbase and Cash App have power, but that's different than the BlackRock power, and that's different than the Marathon or the Riot or all the Bitcoin mining power, and that's different than the power of all the node runners, and that's different than the power of the regulators or the politicians that support it. And so there's a lot of different power in the network, and it's just getting more decentralized. Now it just turns out that instead of the traditional Bitcoin voices from 2020, you still got them, but you've also got voices from Fidelity and BlackRock and other players, and you've got voices from the senators and the Congress people that support them, and you've got voices of the regulator that approved the ETF. That's not fewer voices, that's more voices.
On Tuesday, Bitcoin reached a record high above $69,000, a major milestone from its previous peak in November 2021. However, shortly after this milestone, the crypto asset quickly dropped in a flash crash, briefly dipping below $60,000 before rising back up again. With the cryptocurrency retreating from its still fresh record high, all are left to wonder how long they'll be caught up in the sell the news trade that has followed. Currently, over $800 million worth of bullish positions in the perpetual futures market have been liquidated as prices reverse, as reported by the crypto data tracker CoinGlass. Michael Saylor reminds us of the importance of studying Bitcoin to avoid being caught up by circulating FUD. He expresses confidence in Bitcoin as the best asset to hold, emphasizing the importance of continuously buying and accumulating Bitcoin rather than reacting to short-term fluctuations or external noise. Here are more clips of Saylor as he shares his expert insights.
I think the lesson of Bitcoin is the best asset. There is no second best asset. Buy Bitcoin. Keep buying Bitcoin. Don't sell the Bitcoin. Ignore the noise. If someone studies Bitcoin for an hour, then they will watch the news for 1,000 days, and they will have 87 moments of anxiety during which they'll sell the Bitcoin. Mm-hmm. And so Bitcoin has a lot of those people. Like, they heard someone say buy it, and then they buy it. But if you would buy it because someone said it's a good idea, then you would sell it because someone said it was a bad idea, because you're not making your own decision. You're basically reacting to the crowd or sentiment or emotion. So, a lot of people make investments based upon a recommendation from somebody else. And in the non-Bitcoin world, that's almost essential because there's 10,000 stocks. Most people don't study. How many people spend 100 hours studying each of the S&P 500 stocks? Nobody. Okay, so if you own one of them, how many people spend 100 hours studying one stock that they own? 98% of people don't spend 100 hours studying the one stock. The stock analyst, the person that covers Apple, they spend 100 hours, and everybody else kind of outsources the thinking to that person and says the analyst put a buy rating on it, so I'll go ahead and take their recommendation, I'll buy the stock. And when the analyst puts a sell rating on it, they sell the stock. And that's understandable in the 20th century economy, because in a world where you have to sift through 100,000 different investment ideas to figure out what to buy and sell, you can't possibly do it. Okay, why do you have to sift through 100,000 different things in order to actually avoid losing all your money? And that's because the money's broken. Okay, so in a world where the money is broken, where there isn't a money, where you can just buy the money and wait forever and have it go up, in that world, you're an investor and you're running your own hedge fund. And of course, most people don't have the time to run their own hedge fund, so they're the worst of all worlds. They're taking the risk of a hedge fund, but they're not putting the effort in to run a hedge fund. So In this particular case, Bitcoin is a new asset class. It's digital money. Once you understand it's digital money, and you probably get there somewhere between 100 hours and 1,000 hours. Once you understand it's digital money, then you realize that the strategy is you just buy it and keep buying it and don't sell it until you have to pay a medical bill or until it's an urgent life or death matter where you just have to sell it. But otherwise, you just keep accumulating and you wait for all of the chaos and entropy and inefficiency and disorder that undermines every other asset to take hold. The longer the time goes on, the more difficult and the more disorder there is, and the more people appreciate the value of good money. So I wasn't bothered by the volatility. I was just waiting, for nature to right itself. And I think that the biggest mistake you can make is become insecure. Is it money? Is it not money? Right? Once you've made your decision, you're committed, then you're just thinking if the price is low, that means I get to buy more.
As Bitcoin ETFs become available to the masses, more and more people are learning about Bitcoin and becoming motivated to possess this rising asset themselves, leading to a surge in ownership. This increased interest is fueling a frenzy in the Bitcoin market, pushing its price to skyrocket. Meanwhile, despite the ongoing surge, Mike Novogratz foresees a brief downturn in the Bitcoin market due to excessive speculation and overvaluation. Nevertheless, he suggests that this correction will be temporary and could present a favorable opportunity for investors. Novogratz believes that Bitcoin's correction may only extend to approximately $50,000 before it resumes its upward trajectory toward new highs. Consequently, he suggests that when this correction occurs, it could be an ideal time to purchase Bitcoin. As Bitcoin expands, its availability signals progress in shaping our financial journeys. Experts like Michael Saylor and Mike Novogratz highlight its vast potential. Although there may be occasional setbacks, Bitcoin's overall prospects look bright. Additionally, Bitcoin's popularity is encouraging the recognition and growth of other cryptocurrencies. With anticipated advancements like the rumored Ethereum ETF, the crypto landscape promises exciting prospects for investors. What are your predictions for Bitcoin in 2024 and beyond? Will the optimism continue, driving prices to unprecedented levels, or should we brace for more market fluctuations and adjustments? Share your insights in the comments. If you found this video useful, please consider giving it a like and subscribing to our channel for more valuable content on cryptocurrencies and finance. Thank you for tuning in, and we look forward to seeing you in our next videos. As always, happy investing.